Thank you all for taking the time to join us today. I'm Ken Tamagawa, CEO of SORACOM. Today, I will explain the financial results for the third quarter of the fiscal year ending March 2025. First, let me provide a summary of today's presentation. For the cumulative period up to the third quarter, our recurring revenue, which we prioritize, has grown steadily. We achieved double-digit revenue growth, reaching 4.78 billion yen, a 21.2% increase compared to the same period last year. Total revenue increased by 4.6% year over year, reaching 5.7 billion yen. Operating profit was 169 million yen on a non-GAAP basis and 123 million yen on a GAAP basis, maintaining profitability. However, regarding our full-year forecast, unfortunately, we have revised our initial outlook downward. This was due to delays in incremental revenue recognition and the recording of loss on valuation of investment securities. I will explain the causes, impacts, and our response measures in detail later. What I want to emphasize here is that despite delays in several large-scale projects, our full-year recurring revenue is still expected to grow by 21.7% year over year. We remain committed to steadily expanding our recurring revenue in the coming years. Regarding our growth strategy, we're making steady progress in our growth strategy, not just by keeping our recurring revenue growing, but also by expanding globally, strengthening strategic alliances, and pushing forward with AI of Things, which combines generative AI and IoT. On the global expansion front, our recognition is rising. A well-known research firm, Kaleido Intelligence, named SORACOM a champion in the connectivity management platform category, and our global revenue continues to see strong growth. We've also taken a big step by signing an agreement with Marubeni to collaborate in the IoT space for overseas markets. When it comes to strategic alliances, we're deepening our partnerships. With Suzuki, we conducted a proof-of-concept project to explore IoT integration for electric mobility base units. With KDDI, we're looking into a comprehensive agreement to accelerate collaboration across multiple areas. We'll keep building on these efforts to drive even greater growth. We've been working on generative AI and IoT, or AI of Things, for some time now, but we're now making it an official pillar of our growth strategy to accelerate its development even further. One major step in this direction was the launch of SORACOM Flux last July. Since then, we've continuously updated it, including adding Weather News' climate data via API access. Our efforts in AI of Things have also been recognized globally. Frost & Sullivan, a leading research firm, has given us high marks in this field, showing that our approach to generative AI is gaining international attention. That concludes the summary. Since SORACOM went public in March 2024, we have typically started with an overview of the company. However, for today's presentation, we will go straight into the following topics. Q3 FYE financial results and full year. Progress on our growth strategy. For those interested in our company overview, we have published a separate document titled Business Overview for Investors on our IR website. We encourage you to refer to that for more details. Now, let me walk you through the Q3 FY 2025 financial results and full year outlook. Before diving into the numbers, let me first give you an overview of SORACOM's IoT business. SORACOM not only provides IoT communication, but also offers an end-to-end solution from IoT devices to IoT-specific cloud services. In terms of revenue structure, IoT devices are repeatedly purchased, leading to incremental revenue, while IoT communication and cloud services are billed monthly, generating recurring revenue. Recurring revenue is a stable, continuous stream of income. We place great importance on recurring revenue, which constitutes a high proportion of our revenue, accounting for 70%. Now, let's go over the Q3 numbers. First, focusing on recurring revenue, which is a key priority for us, it reached 4.78 billion yen, marking a 21.2% increase year over year. This demonstrates steady growth, and the recurring revenue ratio remains high at 83.8% of total revenue. Total revenue for the period was 5.7 billion yen, a 4.6% increase year over year. However, in the same period last year, we recognized a large amount of incremental revenue, whereas this year, incremental revenue is concentrated in Q4. As a result, growth for the cumulative Q3 period appears weaker. Gross profit came in at 3.29 billion yen, slightly lower than last year. This is because in the previous year, a large incremental revenue project was booked in Q3, whereas this year, most of it is set for Q4. However, thanks to the high recurring revenue ratio, the gross profit margin remains strong at 57.6%. SG&A expenses increased 19.3% year over year to 3.16 billion yen, accounting for 55.4% of total revenue. As a result, non-GAAP operating profit was 169 million yen, marking a 74% decline year over year. We nevertheless maintained profitability for the quarter. SORACOM's business model is unique, and we define it as an IoT SaaS model. Looking at the graph on the left, it shows quarterly revenue trends. Grey bars represent incremental revenue, which includes SIM sales, device sales, and software sales. This revenue fluctuates depending on when devices are delivered to customers. Light blue bars represent recurring revenue, which comes from monthly payments for our connectivity platform and cloud services. As you can see, while incremental revenue varies, recurring revenue remains stable and consistently grows over time with a low churn rate of 0.3%, steadily increasing quarter after quarter. We place great importance on the stable growth of recurring revenue, and in Q3, it grew by 13% quarter over quarter and 24% year over year, demonstrating strong and continuous growth. Now, let me explain the earnings revision for this fiscal year. First, regarding the seasonality of our business, while recurring revenue remains stable throughout the year, incremental revenue tends to be more concentrated in the second half. This is mainly because many of our customers have a fiscal year ending in March, which impacts the timing of their purchases. We've shared this trend before, and it remains consistent this year. This graph highlights incremental and recurring revenue for last year and this year, focusing on quarterly revenue trends, including the Q4 outlook. Looking at incremental revenue, we can see that last year also showed a second half heavy trend. However, this year, progress through Q3 has been lower than expected. The main reason for this is delays in the delivery of several large projects. That said, we are expecting a significant recovery in Q4, with incremental revenue projected to reach 1.5 billion yen. However, due to delays in large device projects throughout the year, some revenue has been pushed into next fiscal year. This also has a knock-on effect on recurring revenue, as some of that revenue is also shifting into next year. As a result, we have revised our initial forecast downward. Here is our latest revised full-year forecast. Recurring revenue is expected to grow by 21.7% year over year, reaching 6.55 billion yen, maintaining strong double-digit growth. Total revenue, including incremental revenue, is projected to reach 9 billion yen, reflecting a 13.5% year-over-year increase. This is slightly lower than initially expected due to the delayed delivery of large device projects. Regarding operating profit, we have been actively investing in generative AI development, including hiring engineers for AI-related services. As a result, non-GAAP operating profit is expected to be 721 million yen, a 3.5% decline year over year. On a GAAP basis, due to increased stock-based compensation expenses, operating profit is projected to be 650 million yen, a 10.6% decline year over year. This slide shows the variance from our initial forecast. Due to the delayed timing of incremental revenue, we've decreased our forecast by 0.6 billion yen. Additionally, the impact on recurring revenue resulted in a decrease of another 0.3 billion yen. This led to a total 0.9 billion yen decrease in expected revenue and a 0.6 billion yen decrease in expected gross profit. On the positive side, we expect to reduce SG&A expenses by 0.36 billion yen. As a result, expected non-GAAP operating profit falls 0.3 billion yen below the initial forecast. In addition to the delayed recognition of incremental revenue, we recorded a 198 million yen valuation loss in Q3 on investment securities from past investments. However, with the expected recovery in incremental revenue in Q4, we anticipate maintaining full-year profitability. Let's take another look at our Q3 financial performance. This slide is about revenue growth and recurring revenue trends. On the left graph, recurring revenue grew 21% year over year, reaching 4.78 billion yen. We continue to see strong growth from new projects, helping us achieve double-digit growth. In Q3, the recurring revenue ratio was high at 83.8%, but since a large portion of incremental revenue is expected in Q4, the full-year recurring revenue ratio will likely decrease slightly. That said, we still expect to maintain a high recurring revenue ratio of around 70% for the full year. On the right graph, total revenue, including incremental revenue from SIMs and devices, reached 5.7 billion yen, up 4.6% year over year. Growth appears slower in Q3, but since incremental revenue is heavily concentrated in Q4, we expect to catch up in the full year results. Now, let's take a closer look at the KPIs that support recurring revenue. Our recurring revenue is determined by two key factors. ARPA, average revenue per account, is the average monthly spending per customer. Number of billing accounts is the total number of active subscription-paying customers. On the left graph, ARPA has grown by 10% year over year, maintaining double-digit growth from last year. The right graph shows the number of billing accounts represents customers with active monthly subscriptions. By Q2, we had already exceeded our initial full-year forecast pace, and by the end of Q3, we reached 8,700 accounts, marking 10% year-over-year growth. Given this momentum, we have raised our initial full-year forecast from 8,500 to 8,900 accounts. Now, let's discuss the growth in gross profit. On the left graph, Q3 gross profit was 3.29 billion yen, showing a decline year over year. However, since we expect a significant increase in incremental revenue in Q4, we anticipate a full-year increase in gross profit. Gross profit margin, on the right graph, stood at 57.6%. This high margin is due to the large proportion of high-profit recurring revenue. For the full year, as incremental revenue increases in Q4, we expect a slight decline in the profit margin, but we anticipate maintaining a high level in the upper 50% range. Now, let's go over the operating profit. The left graph shows the year-over-year change in SG&A expenses. Due to investments in AI research and development and new costs associated with going public, SG&A expenses increased as planned. As a result, SG&A expenses grew 19% year over year, reaching 3.16 billion yen. The middle graph shows the number of the employees as of the end of Q3. We continue to prioritize investments in key talent, particularly engineers for developing, maintaining, and operating advanced services, as well as business professionals for sales. This fiscal year, we actively hired engineers, including those specializing in generative AI. By the end of Q3, our headcount, excluding Carriot, increased by 16 employees, reaching 166 employees. Including Carriot, our total Q3 end headcount was 179 employees. On the right graph, non-GAAP operating profit for Q3 was 169 million yen. Since incremental revenue is heavily concentrated in Q4, operating profit declined year over year in Q3. However, we remain profitable on a quarterly basis and expect a significant catch-up in Q4, leading to a strong full-year result. This concludes our Q3 financial results. Next, I'd like to discuss the progress of our growth strategy. At the core of SORACOM's growth strategy is the steady expansion of recurring revenue. This stable foundation allows us to pursue additional growth opportunities, including global expansion, strategic alliances and M&A, and generative AI and IoT, or AI of things. Previously, we emphasized the consistent acquisition of large-scale projects as a key part of our strategy. While this remains important, we now see AI of things as a major pillar of our future growth. As a result, we have updated our growth strategy to reflect this shift and further accelerate our expansion. SORACOM's recurring revenue is supported by over 30,000 customers who use the IoT platform SORACOM across a wide range of industries and applications. Currently, the number of SORACOM connections has exceeded 7 million. One of the new use cases in Q3 is NX Logistics Research Institute and consulting from the Nippon Express Group has adopted SORACOM to enhance warehouse operations efficiency. Highlighted in dark green on the chart are our global customers. We continue to see strong international adoption with many new customer cases. One notable example is RX Keeper, a US-based healthcare startup that offers a medication adherence solution. They use SORACOM IoT buttons, allowing users to easily connect to the cloud with a single press. In addition to these, we have publicly shared over 300 case studies, showcasing cross-industry knowledge, a key strength of SORACOM. Firstly, one of the SORACOM's key strengths is that our platform is built on global standards for both connectivity and cloud, allowing us to support customers worldwide. We currently operate with a 3-region structure, with offices in Japan, United States, and United Kingdom. As shown in the left chart, our local teams in the US and UK are actively working with regional customers, and we are seeing a growing number of successful use cases in these markets. Global revenue reached 2.7 billion yen, marking a 29% year-over-year increase as of Q3. Global sales now account for 47.8% of total company revenue, approaching half of our total business. Compared to Japan, the US market is over 5 times larger, and Europe is more than 4 times larger. Given this enormous growth potential, we remain fully committed to increasing our global market share and will continue to focus on scaling internationally. SORACOM's global presence and reputation continue to rise. Kaleido Intelligence, a leading global research firm, has highly rated our cloud-native mobile core system, recognizing it as an innovative technology. As a result, SORACOM has been named a champion in the connectivity management platform category for 3 consecutive years. Among global players, we ranked second out of 39 companies following Telefonica, receiving exceptionally high recognition. We are the only Japanese company to make it into the top 15. SORACOM's high recognition is driven by its continuous innovation in service development, the significant market impact of its recent generative AI-powered services, and the high fault tolerance of its cloud-native mobile core system. As part of our global expansion efforts, we are excited to announce a new collaboration with Marubeni. Marubeni, as a leading general trading company, has extensive domestic and international networks and deep market expertise. Additionally, the Marubeni Group operates MVNO and IoT services through its group companies. By leveraging SORACOM's innovative IoT platform and core technologies, we will work together to expand IoT business opportunities in global markets. We are also expanding our partnerships with global companies to enhance our international presence. In February, we launched an evaluation kit featuring SORACOM's IoT connectivity in Europe and North America, in collaboration with Sequens, a company in France. Additionally, we began offering an iSIM-equipped evaluation kit, jointly developed with Kigen, Sony Semiconductor, and Murata Manufacturing, also in Europe and North America. Through these strategic global partnerships, we are actively working to develop globally competitive products and expand our product coverage worldwide. The second pillar of our growth strategy is strategic alliances. We have been strengthening our partnerships in the connected car sector, particularly with KDDI and Suzuki. In Q3, we conducted a proof of concept project with Suzuki for their electric mobility base unit, a B2B solution that provides mobility platforms for various robots. This POC focused on integrating IoT capabilities into the system. Moving forward, we will continue working with KDDI and Suzuki to support the global expansion of Japan's connected car industry, leveraging SORACOM as a globally scalable IoT platform from Japan. Our partnership with KDDI extends beyond connected cars, as we are also collaborating in multiple areas, including the OEM provision of our cloud-native mobile core system. The left graph shows our quarterly revenue from KDDI, which has historically been heavily weighted towards the second half of the fiscal year. This Q4 concentration continues this year, which we recognize may cause concerns for our investors. While we made efforts to secure early project orders, the revenue remains skewed toward Q4 once again. In response, we are in discussions to finalize a comprehensive agreement from next fiscal year, aiming to stabilize incremental revenue by securing earlier project orders. The comprehensive agreement will cover not only the OEM provision of our advanced mobile core system and connected cars, but also aim for long-term collaboration across multiple areas, including AI of things. We are also strengthening alliances in the utility sector, which represents a large market opportunity. Nichigas has already deployed over 1 million units of its automated gas meter reader, Space Hotaru, using SORACOM's connectivity. In addition, we are actively working to expand this solution to other gas companies, driving further adoption across the industry. In addition to our existing utility partnerships, we are pleased to announce a new capital and business alliance with Shizen Connect. Shizen Connect operates a cloud-based platform that connects various energy devices from different manufacturers, enabling individual device control and centralized management of virtual power plants, VPPs. Their key IoT device, Shizen Box, integrates SORACOM's connectivity, reinforcing the platform's capabilities. By leveraging Shizen Connect's strong relationships in the VPP sector, we aim to enhance our IoT technologies to further support the growth of virtual power plants, a crucial area for the future of energy management. The third pillar of our growth strategy is AI of things, the integration of generative AI and IoT. At its core, IoT operates by collecting data from various devices, storing it, extracting insights, sending alerts, and controlling physical objects. This fundamental process enables automation and smarter decision-making across industries. With SORACOM, collecting data from a wide range of devices has become incredibly simple. However, data analysis still requires human intervention, making it difficult to process large volumes of diverse data in real time. Meanwhile, generative AI has advanced rapidly, especially in text-based AI models like ChatGPT. More importantly, these AI models are now becoming multimodal, meaning they can process not just text, but also images, audio, and video. This opens up new possibilities for real-time, automated IoT data analysis, a major step toward AI-driven decision-making and control in IoT. With generative AI, even if vast amounts of diverse data flow in from numerous devices, it is now possible to process that data in real time. This breakthrough has the potential to solve long-standing challenges in the field, unlocking limitless possibilities. It brings us even closer to realizing our vision of connecting people and things worldwide to create a resonant society. This progress excites us. However, we've also recognized the challenge. Integrating IoT collected data with generative AI to build practical applications requires advanced programming skills, making it difficult for many customers to implement on their own. To address the challenge of integrating IoT data with generative AI, we launched SORACOM Flux, a service that allows customers to easily and quickly build advanced IoT applications without requiring deep programming expertise. This has garnered significant attention since its release. Since its initial announcement in July last year, we've continuously expanded its capabilities. Key updates in Q3 include support for Amazon's new generative AI model, Amazon Nova, and enhancements to webhook actions with authentication headers, enabling more secure integrations with a wider range of external services, further expanding the usability of SORACOM Flux. Additionally, starting in coming March, we will introduce enterprise and premium paid plans, further solidifying SORACOM Flux as a core solution for AI-driven IoT applications. The momentum is growing, and we are excited to see how businesses leverage these new capabilities. SORACOM Flux not only enables the utilization of IoT data, but also expands its potential by integrating with various specialized external data sources. Another significant update in Q3 is our partnership with Weather News, enabling direct access to weather data through SORACOM Flux. For example, a device can get location data, use generative AI to analyze future weather forecasts based on that location, and then automatically adjust its behavior depending on the weather. If it's going to rain, a construction site can reschedule tasks, or a supermarket can adjust inventory forecasts based on expected weather conditions. Recently, there have been reports of heavy snow across Japan. For example, by using snow forecasts, it's possible to pre-activate road heating to minimize snow impact, or turn it off when the snow is expected to stop, reducing fuel costs. Various use cases can be explored. Since our founding, we have always developed services by incorporating customer feedback and the latest technological advancements. With SORACOM Flux, we will continue to expand its capabilities and add new integrations. If IoT data can be combined with various external data sources, such as the weather data introduced this time, real-time AI-driven decision-making can help solve on-site challenges. This aligns with our founding vision. Moving forward, we aim to integrate more external data from specialized providers like Weather News, including human mobility data and traffic information. In the field of AI of things, our continuous development efforts have been highly recognized. As with Kaleido mentioned earlier, we have also received exceptionally high global recognition in the domain of generative AI. In this regard, Frost & Sullivan, a leading global research firm, has acknowledged SORACOM's outstanding technological leadership in generative AI of things and awarded us the Technology Innovation Leadership Award. We had already established a competitive advantage by adopting a cloud-native, fully virtualized and distributed cellular core architecture. Now, with the integration of AI, we have further strengthened our differentiation and have been highly regarded for leading the AI of things industry on a global scale. So far, I have discussed our revenue growth strategy. Finally, I would like to explain our approach to profit growth, as SORACOM is committed to achieving profitable growth. At our company, we emphasize the combined value of the growth rate of recurring revenue, our stable source of income, and the non-GAAP operating profit margin as the KPI for profitable growth. We use non-GAAP operating profit for this calculation because we intend to actively invest in acquiring top talent and pursuing inorganic growth through M&A. Unfortunately, due to a revision in our performance forecast, our profitable growth metric declined slightly to 29.7% this term. However, we will continue to strike a balance between top-line growth and strategic investments, aiming to increase this figure to 40% in the long term. To ensure a strong commitment from the management team toward improving profitable growth, we have decided to issue performance-based stock options for executives. The performance conditions include doubling our revenue to exceed 20 billion yen, with recurring revenue our key focus, accounting for 70% or more, surpassing 14 billion yen. In addition to revenue growth, we also prioritize profitability, aiming for a non-GAAP operating profit margin of over 10% and a profitable growth metric exceeding 40%. Regarding stock price conditions, with our current market capitalization at approximately 55 billion yen, we are targeting a threefold increase to 150 billion yen by the fiscal year ending March 2030. We, as the management team, take the recent downward revision of our forecast seriously and are fully committed to driving the business forward with a unified effort. This concludes the progress update on our growth strategy. SORACOM will continue to strive toward becoming a global platform originating from Japan and remain dedicated to realizing our vision. Lastly, I would like to take this opportunity to inform our investors about the introduction of a new shareholder benefit program. As for the details of the shareholder benefit program, shareholders who hold at least 600 shares as of the end of March will receive a coupon for our service, SORACOM Mobile, which allows seamless internet access across 58 countries with just one app. This initiative also aims to enhance awareness of our services. The coupon can be used in Japan as well, enabling data communication domestically, so we encourage shareholders to try it out with ease. By introducing this shareholder benefit program, we hope to expand our investor base, particularly among those who are likely to engage in steady trading, while also enhancing the attractiveness of investing in our stock. That concludes my explanation. Thank you for your attention.